Hey everybody, thanks for joining us this afternoon. I'm waiting for more people to come in from the waiting room to the webinar itself. And once we sort of level out, then we'll get started. There's quite a few of you who have a lot of questions today, so I hope our guest is ready. Thank you so much for joining our webinar today. I've gone ahead and muted all your phones and I've turned off the chat window. Please ask questions though. Use the Q&A box on your screen to ask questions. If they're related to what Jeff is talking about or Tim is talking about during this presentation, I'll ask it right away. Otherwise, we'll probably wait to the end to ask most of the questions. So just be patient. He's got a lot of really great information to get through. Our presenter today is Tim Jeffcoat. He's the District Director of US Small Business Administration out of the Houston District Office. So Tim, thank you so much for being with us today and interested in your presentation.
Okay, well, hello everybody. I hope you can hear me well.
You're great.
I'm going to take you through just a few slides here to describe what the SBA is doing to support small businesses at this time. So this gives you an overview of what we're going to talk about. We're going to talk about specifically disaster loans available from the US Small Business Administration. These are for small businesses and nonprofits. We'll talk about some non-financial assistance. And then I'll talk about some additional resources, almost all of which are not the SBA's, but might be beneficial. Now note that the slides we're going over are available at the website you see on your screen. So that's for my office. You go to that website and you will be able to download this exact presentation. There's also a presentation there on how to fill out the loan application. So it's not a completely exhaustive presentation, but it is kind of a good guide to how to do the economic injury disaster loan application. So here's the basics. Economic injury disaster loan, or what we also call an EIDL loan, is up to $2 million. Let's say that you applied for and got this loan this month. You don't have to begin paying until March of 2021. So you're going to get 12 months of no payments. As I mentioned, small businesses and private nonprofit organizations are eligible to apply. This is used for your fixed debts, payroll, accounts payable, or other bills that would be affected by this disaster. The loans will have a 3.75% interest rate, 2.75% for private nonprofit, and they're mostly going to be for 30-year terms. So that's a pretty long time to pay that back to make it easier on you to be able to afford that. Now you probably see on my screen it says without credit available elsewhere. I'll talk a little more about that, but what that means is if you have enough resources right now to keep your business running for the next, let's say, 6 months, then this loan is not for you. On the other hand, if you don't have any chance of paying all of your expenses over the next 6 months, then that's why we have this loan. It's to help you get through this. So here's some important things for you to know. There's no cost for you to apply. So we're the federal government. You don't have to pay us. You already have. There's no obligation to take the loan if it's offered to you. Generally speaking, this is going to reflect 6 months of operating expenses. So you know your business. What does it cost you to operate for a month? Let's just say that's $1,000 to make the math easy. By the way, I'm a music major, so I need easy math. 6 months operating expenses in that case is $6,000. So that's how much you would expect the loan to be for. I commonly get asked, what about my existing loans? That's okay. That does not disqualify you. If you currently have an SBA disaster loan, for instance, from Harvey, or if you have an existing SBA business loan, you sometimes hear those called 7As or 504s, you still qualify. But when you get this loan for COVID-19 disaster relief, it won't consolidate the other loans. So you would have at that point at least 3 loans: your business loan, your disaster loan, and then the new loan. Now do let me point one thing out about existing disaster loans. If you have a Harvey loan or some other SBA disaster loan, Yeah, I think it was yesterday, the SBA announced that we will be contacting you shortly, and you won't have to pay those loans for the rest of this year. Don't stop paying them now. That might get you in trouble. But if we should be contacting you probably by email, I'm not exactly sure how they will be doing it. And we will probably be giving you the choice of whether you want to forbear or postpone those payments until the end of the year. The whole point is to help you get through this disaster. Please note, if you do choose to delay those payments, the interest will still accrue. So you're still going to have to pay that once you start paying the loan back next year. But right now, the point is, we get you the relief that you need. Another common question, do I need collateral? Well, if the loan is going to be over $25,000, then we do require collateral, but we don't decline you if you don't have collateral. We just want you to pledge whatever is available as collateral. Real estate, when available. Now note that in Texas, you can't pledge your primary residence. So we can't take that as collateral, but we would probably look to most anything else. It's easier to talk about who is ineligible. So any business where gambling is more than 1/3 of its gross revenue, casinos and racetracks where the purpose for being is gambling, businesses of a prurient sexual nature, pawn shops where more than 50% of the income derives from interest, religious organizations, investment companies or lending companies such as banks, charitable organizations. Now, private nonprofits are okay, but charitable organizations are what would be called a public nonprofit. Speculative activities and agricultural enterprises. So generally speaking, if you are an ag business, then you are served more by the US Department of Agriculture than by the SBA. How do you get approved? Well, there's three main things we're going to look at. First important concept is we define the beginning of the COVID-19 disaster as being January 31st. So ask yourself, if in January, let's say the last week of January, you went and sat down with a banker to borrow money for something, would he or she have said yes? If so, you're in good shape. So we're looking to know that as of January 31st, you are basically current on your obligations, both personally and with your business. You didn't have defaults. You weren't several months behind on a bunch of different bills. So we're looking for that your credit history is acceptable. Secondly, we're looking for the repayment ability for this loan. So if we loan you, let's say it's $1 million that it's going to take to get you through this, we also need to be able to forecast that once your business is healthy again, that you will have enough cash flow to repay this loan that should have a 30-year duration on it. So your basic credit background, your ability to repay the loan, and then basic eligibility. And there's two things there: that you're located in a declared disaster area, and you are. Texas is a declared area. And that you had losses as a result of the COVID-19 crisis. And you probably wouldn't be on this conference call if that wasn't you. So that's the basic. There's more to it, but in a nutshell, you know your background. If you can say, yeah, I'd be able to repay, yeah, my credit history should be acceptable, and yes, I'm in Texas and I've had some losses, okay, then you should be applying. So how do you do it? First and most important note, use Internet Explorer or Microsoft Edge. I am being told by people that have tried to apply that if they use something other than the most current versions of Explorer or Edge, they can hit these really weird timeouts. They're like you're in the middle of doing something and it just times out and you can't get it to respond again. So make sure you use one of those two. If you have those browsers, then update them before you go do this application. If you don't have them, maybe you want to download them. So everything is online for Harvey and things like that. We always have disaster centers here in the area that can help you. That does not exist for COVID-19 for a number of reasons. The website is www.sba.gov/disaster. Go there and it will lead you to all sorts of locations within disaster that can help you. The one we're talking about would be applying for a loan, but there are other parts that would be of interest to you as well, and I'll talk about those in just a minute. You can call our customer service center, 800-659-2955. I'm hearing that the waits sometime can be a little long on that line. Think of it this way. Hurricane Harvey is happening in 50 states at the same time right now. It's even bigger than that, COVID-19. It's like 50 Hurricane Harveys at the same time. So we're liable to be quite busy. So you might consider doing things upside down. Instead of trying to call during working hours, why don't you call between 7 p.m. and 7 a.m.? For a lot of people that work in the restaurant business, that's not new. That's normal work hours for you, perhaps. You can email at disastercustomerservice@sba.gov. And if you need a hearing impaired line, that toll-free number is there as well. So what do you need to apply? So the basic loan application will be obvious when you look at it. In addition, you're going to need an IRS form called a 4506T. That lets us get your IRS transcript from the IRS that we can look at as we do your loan work. We will need that for the owner of the business. If there's more than one owner, we may need it for all of them. So each principal that owns 20% or more, if you're a partnership, then each general partner. If you're an LLC, then each managing member. If you have multiple businesses, then we need one on each owner who owns more than 50% of one of the affiliate businesses. So we'll need a 4506T on each of them. We also need to see at least 2 years completed business tax returns with all schedules. Now, hang on a second. You remember I showed you on a previous page, you take your operating expenses, multiply that by 6 for 6 months, your monthly operating expenses times 6, then that should get you to roughly the amount that's going to be borrowed. If that is under $500,000, we only need the 4506T. We're not going to require that you submit the tax returns. So that will be very helpful for you. If you believe it will be more than the $500,000, when you look at your operating expenses per month times 6, then we will need those tax returns. Now, if you haven't been in business for 2 years, that's okay. Just submit what you have and we're going to work with it. We may have to ask for more information. Each owner has to submit a personal financial statement, and you need to submit what's called a schedule of liabilities so we understand what your debts are and your normal recurring bills. Remember on a previous page I said that at the disaster website address, there's other information you might like there besides just the application. Well, you can go there and you can download these forms. You can download the 4506T, the personal financial statement, and the schedule of liabilities. And then you can go ahead and complete all those before you even start the application. Then the process might even be quicker and smoother and more satisfying. We may require a couple more things from you, maybe more than a couple, but these are not that uncommon. Particularly if you don't have recent tax returns, we will need to see a current year-to-date profit and loss statement or income statement. We may also want you to fill out something called a 1368 form, which is just a simple one-page form that lets you record your monthly sales figures. Those are going to be very important to us because we need to look at how much revenue flows through your business on a normal month, not a disaster kind of month, so that we can determine whether you can pay this back in the future. So the general 3-step process, you do that application we just talked about, then it goes to an SBA loan analyst. They're going to look at your information, check your credit, double check some of those forecasts that I talked about, and then they'll contact you to discuss next steps. Generally, under normal circumstances, they want to be able to get your application in their hands within a week and get to the point of the final step within 4 weeks. So closing the loan and dispersing it. At that point, you will have agreed with them on some loan that you want, sign it, submit it back to them, and then your first disbursement of $25,000 would be within 5 days. The person that's been working with you to execute the loan goes away now, And a new person comes in, a case manager, and that's who you'll work with over the life of the loan. Now, you may have more than one case manager, they may change hands, but a case manager is who you work with after the loan starts. And then, now let's see, next slide. There's some really important things when you go through this application process. First, don't rush it. Take your time and make sure that you can get it as detailed as possible. Think of it this way. That person, that loan processing analyst, may be looking at 500 loan applications today. I don't know, maybe it's not 500, maybe it's 50, but still, it's going to be 50. They pick up yours and they look at it, and there's 2 pieces of information missing that are important. Then they have to put yours down, ask you for that information, probably by email, and then they're going to go on to the other loan applications. So when your data comes back that we've been looking for, that we have to come back to you in the queue of loans in order to catch up with where we left off. So you could be inviting and creating unnecessary delays. So please be as complete as possible. If you're in doubt, give us too much. If you need more funds after the loan is disbursed to you, then just let us know, and we will work with you on some supporting documents for an increase. If it's too much, then you can request a reduction. And if you wind up being denied, you get a 6-month period to either come up with the additional information or to otherwise provide a written request for reconsideration. Sometimes that denial just occurs because we couldn't get some tax documents, or we couldn't get some other information that we really needed to see in order to make a decision for your loan. Now, I know I've seen some questions popping up over here. Yes, if you have an existing SBA business loan, you may contact your lender right now and ask them to forbear or postpone those payments. If you have what's called a 7A loan, that's up to 6 months. If you have a micro loan, it's up to 6 months as long as your maximum term doesn't exceed 6 years. And if it's a 504 loan, which could be a lot of the people on this call, then it's up to 6 months or 20% of the original loan amount, whichever is less. Now, we have given the authority to the lenders to do this forbearance. We encourage them to do it. They are not obligated to do this. So it's conceivable that you will contact them and they will decline. But I think that's unlikely. They want you to succeed. We want you to succeed. They want you to be their customer in the future as your company grows after this crisis. So I think they will be very willing to talk to you. Please note, your interest will be accruing over this period of forbearance. So as soon as you're able to pay, you want to. You don't want that interest to keep accruing for no good reason. But in the meantime, you need relief, and you can get it by contacting your SBA lender and telling them you'd like to forbear this loan. I think it's pretty standard practice that if they forbear it, they do 1 or 2 months at a time, maybe 3. They probably won't do all 6 at once. And that's okay. That just means after a month or 2, you got to call them back and say, okay, I need 2 more months. No big deal. So in addition to getting a loan to help you through this, some other things we can do for you right now. The SBA has 3 important partners here in the Houston area. The Texas Gulf Coast Small Business Development Centers, also called SBDC, the SCORE Mentor Group, and the WBEA Women's Business Center, or WBC as we call them. They can help you with anything to do with your small business. So right now, some things you might want help with. Cash flow management. So they've got financial experts there that are completely free. You don't have to pay them a penny to help you. And they can help you with your short-term financial management right now. Cash is awfully important. Keeping cash on hand gives you flexibility, gives you alternatives, so they can help you with that. Right now, you may not have a lot of your typical customers involved with you any longer. That's bad. It's good to stay engaged with them. So maybe this is a time to engage in some new social media or some other way of staying in touch with your customers. If you mainly use Facebook right now, perhaps it's time to start using Instagram, or maybe it's time to start tweeting. Some other social media forum to stay engaged with your customers. We have clients right now that are having difficulty with various ports around the world, getting products in and out of those ports. Supply chain issues. If your business is slow, your suppliers' businesses may be slow. This is the perfect time to look at diversifying your supply chain so that you are reasonably certain of not running out of important supply. As soon as you hit a point of stability, excellent idea is to get with one of these three partners or even all of them and work on a strategic plan for your business to position yourself for prospering when the disaster is over. There's probably a number of decisions you can make right now or in the coming weeks that a couple of months from now or 3 or 4 months from now when this is over will allow you to spring back strong. It's also a great time to do a financial tune-up, to look at your financial fundamentals and see how we can help you make them even stronger after the disaster.
Hey, Tim.
Yes, ma'am.
Hey, Tim. Sorry, you're a little muffled. I'm not sure where your microphone is, but could you try and make sure it's close to your mouth? You have valuable information. I want to make sure I hear it.
Absolutely. I'm sorry about that. I was getting so excited. I was moving away from it. Is that better?
Yes, it's great. Thanks.
Sorry. The last one, awfully important. We know we live in Houston. We do have disasters from time to time. I've lived here 5 years, and there's been at least one declared disaster every year I've been here. So it's a great time also to plan for the next disaster, to do a good assessment of your risks, and to maybe look at some alternatives with insurance for your business to help you next time there's some kind of a disaster. Now this page lists a bunch of stuff that is not mine, and I can't, I'm not engaged in it except the very first bullet. So let me explain. The SBA has an official YouTube channel. On that channel, at the link you see, is a video that explains how to do a disaster loan application. That particular video is for any kind of disaster situation. So it covers personal, for instance, homeowner disaster. It covers business damage disaster. Then it also covers what we've been talking about, economic injury disaster. So parts of it might not be pertinent, but it is a good video, and it is done by an SBA expert. Everything else on this slide is not related to the SBA, so we don't endorse it. I'm just sending this to you so you can be aware of it in case it helps. One of the non-SBA videos on YouTube is by the organization Generator. That's with the number 8 in the generator word. And it is specifically for the COVID-19 disaster, specifically for the economic injury disaster loan. I haven't watched the entire thing, but I did do a quick scan through it today, and it looked quite complete. It looked like it was reasonably well done. That might not be a bad idea to look at. It takes about 15 minutes. But please note on YouTube, if you just search for SBA disaster videos, there are dozens and dozens of them. They are not ours. There's only one that is ours. All the rest could be wrong and lead you in the wrong direction. I understand JP Morgan Chase and Regions Bank are doing special programs for their clients. You probably know the Texas Restaurant Association has started a grant program. You just Google Texas Restaurant Association and you'll find it. I think it's $5,000 for those that apply and are approved. They'll get up to $5,000 to help them through this. The Galveston Economic Development Alliance has worked with some of their member banks to start a short-term loan program. We call it a bridge program or a bridge loan. So it's about $25,000 maximum. It's for a maximum of 6 months. And the idea is to get cash in your hands quickly to help you get through this while you're waiting on, for instance, an economic injury disaster loan or maybe some insurance to pay. So there's a bit.ly address to get you to that, or you can just Google the Galveston Economic Development Alliance, and I'm sure the information is there on their webpage. And if you have an existing banker or lender that you work with, even if it's not an SBA lender, call them. Not only maybe they will be interested in forbearing your non-SBA loan, but they may also be able to do some kind of a bridge loan for you. So I hope that information can be of help to you. Final thing, this is the contact information for us and our partners. There's the Gulf Coast Small Business Development Center phone number and website, Houston SCORE phone number and website, the WBEA Women's Business Center phone number and website, and then my information. All of us are working remotely and virtually, so we can help you via phone, via Skype, via text, via email, pretty much any way there is other than in person at the moment. With that, I think, Anna, it's time to take some questions.
Great. All right. Well, I appreciate that, Tim. Just a reminder, we do have people from all over the state, which is great. I know that there are a lot of people joining us from Houston, so they are used to having one disaster a year, as you put it, as a nice reminder. So we'll jump into questions now. I've started to structure the list a little bit. The first one comes from Ronald. He asks operating expenses related to operating expenses. We have cost of goods, payroll, and fixed expenses. Which of these three would you consider operating expenses?
I would say all of them. Let's put it this way. Operating expenses would be whatever it takes for your business to operate for that month. So there are things that you could probably leave out of that and that you choose to spend in some given month. But ordinarily, what you just described, Ronald, those are operating expenses.
Great.
And if there's a doubt, include it. And we can always, when you're working with the loan analyst, they can say, you know what? We don't include gummy bears for your desk as normal operating expenses. So we might, disallow that. But include it if you have any doubt.
That sounds like something based on personal experience, Tim.
I like gummy bears.
Okay, so the next one comes from Jonathan, and there were a couple people that asked the same question. If we have several different entities paying management fee to a company, can we take one loan, or do we have to take one for each entity?
Yeah, it's probably going to be one loan, and you're going to combine all the information. So let's say, for the sake of argument, that you've owned 3 different franchises, a smoothie franchise, a chicken franchise, and a sandwich franchise. The company that owns the 3 of them should be the one that will be applying for the loan. Here's the kicker: you might not be small. The size standard for a small restaurant, full service, is $8 million a year. That's averaged over 3 years. So if your revenues exceed $8 million a year averaged over 3 years, then you are not a small business. If it exceeds $12 million averaged over 3 years, that would be the size standard for a limited service restaurant. So that 12 million would be that size standard. So what you do is you go to Google and you type in SBA, as in Small Business Administration, SBA size standard table. You'll get that table in PDF format. Just search for restaurant, and there you will see the definitions of what constitutes a small restaurant by category. So if you're a caterer, I think it might be up to $30 million. I'm working from memory, maybe it's 22. But for most restaurants, the size standard is going to be 8 million. So to recap, it depends on your structure, but probably you're going to apply for one loan for all of your entities. But if we add up those entities and it exceeds $8 million per year, when we average over the last 3 years of performance, then you are not a small business.
Perfect. Okay. And just another reminder on the microphone, Tim, sorry. Another question from Michelle. Are there restrictions for use of loan funds? I'm sure you get this question a lot.
There are. These loan funds are only meant to be used to get you through this disaster. So they're meant to be paid for those operating expenses that we were talking about. They are not meant for purchasing new equipment or making, repainting your building or any of that. They are strictly meant to maintain your business until such time it can return to normal.
Perfect. Okay, is there a special form for the personal financial statement whenever they're going through the application?
Yes, there absolutely is. Lloyd, if you go to that sba.gov/disaster website, you'll see, I forget what it's called. It's probably called a forms library or disaster application forms, something like that. It'll take you to one page. It lists about 15 forms. You don't need all of them. You'll see that they're, like 5 different versions of one form, depending on if you're a partnership or a sole proprietor. And you'll see the personal financial statement right there.
Got it. Got it. Sort of related to that, if you have $1 million in personal assets, would a loan be approved for your restaurant?
It probably depends on the assets. If it's $1 million in liquid assets, it goes back to what are your annual operating, your monthly operating expenses. If it takes you $1 million a month to operate your restaurant, and we're looking at this as a 6-month duration for the loan, then that would be, well, that was a really crappy example because the maximum was $2 million. But if we wound up determining that you needed the whole $2 million to get through 6 months, then the fact that you currently have $1 million in assets might not make a difference. You would still be eligible for the loan. If the $1 million was in liquid assets, as in cash or easy to get to cash-like instruments, then we may be looking for part of that to be used. But I hope that answers your question. How much money you have is only important when we compare it to how much money you need. If you don't have enough to get you through 6 months, then you're probably okay for applying for this loan.
Sure, sure. Okay, and then another question from Shelley. What if your real estate is already pledged as collateral?
Depends on whom it is pledged to. If it's pledged against an SBA business loan, then that might not be so bad. I think don't let that slow you down, Shelley. Not having collateral or collateral already, somebody else already having a first lien on it, that's not going to invalidate you. It just means it's collateral we won't be able to claim. We still would like to help you if we can.
Great. Okay, one other thing, let's see here. A bunch of people are asking questions related to, well, let's go ahead and get to it. Do you want to talk a little bit, there's that one question there in the middle, Tim, from the anonymous person about the loan program being discussed in Congress right now. Do you want to talk about some of that?
Sure, sure. Bottom line, it has not become law. So
Right.
Irrespective of what they say, none of it has happened yet. So the House has to agree to it, then the Senate agrees to it, then a consolidated bill goes to the president and he signs it. At that point, it will become Code of Federal Regulations, and then we can do something with it. Right now, it's simply talk. It might be really interesting talk, and we all hope it all happens, but right now it is only talk, and it doesn't affect anything today. So if you're waiting for something to happen there before you apply for this loan, and you really think you need the loan, I would tell you to hurry up and apply. Go ahead and get your application in. Once they pass this legislation, maybe it changes things. But if you wait, then you're going to be behind the other 100,000 or 250,000, however many businesses applied in front of you, because this is absolutely a first come, first served situation.
And what's your average timing now for disbursement of the funds again, Tim?
If everything goes perfectly, from the time you click submit till the time we're able to review your stuff is a week. And then within the next 3 weeks, we want to be able to review that, make some kind of a decision, and get back in touch with you to finalize the loan amount. And after that, at the conclusion of that 4 weeks, we hope we are dispersing to you your first payment of $25,000. That's under normal disaster circumstances. But you know, the analogy I gave earlier, and that this is like Hurricane Harvey happening in all 50 states at the same time, it could take longer.
Yeah, no, that's a good point. It's not just Texas that's affected, although we like to, only think of ourselves. That's so true.
Well, we are the center of the universe.
We are. This is a question I think James should probably follow up directly with you. He said he applied this weekend, but never found a place where it asked how much of a loan he needed.
Yeah, I know. I think that's a perfect question, James. A gold star for you. You don't ask. We tell you. We look at the information you gave us, and from that we say, aha, we see now that it costs you $20,000 a month to run your business. So that's $1.2 million over 6 months. And then we're going to work up a loan analysis based on you getting $1.2 million. Then, I mentioned that the loan analyst, once they do all that work, they get back with you and say, okay, we've looked at all your stuff. We think you need $1.2 million. That's what should get you through the next 6 months. Do you agree? If so, sign here. We'll send you a check.
Sure. Okay. What about, this is an interesting question from Sarah. If the restaurant rents their property, what can they use as collateral?
Any other assets that you own, and don't only think about the restaurant, but what the owners own can be pledged as collateral. And we will want to get those listed on the list of collateral if it's over $25,000.
Right.
But remember, if you don't have any collateral, that doesn't mean we're going to turn you down. That means we're just not going to be able to use that as part of the loan making decision.
That's fair. Let's go to Irma's question. She says they have an existing, you touched on this a little bit earlier, SBA 504 loan. If we've already contacted SBA, do you recommend continuing to discuss with them or to file through sba.gov/disaster?
Both. Irma, I would say that you want to call whoever you got your 504 with and see if they can forbear that loan. And at the same time, I mean, it depends on how much pain you're having. If you need to cut your cash expenses each month or week or day, then I would encourage you to call those 504 folks right now and tell them you want to forbear that loan. That's an important decision because you will continue to accrue interest. But right this minute, it means you wouldn't be paying that loan anymore, and that could give you a ton of relief. I would also, if you're having some pain and you think you're going to need money to get through this, I would also apply for the EIDL loan. You can always, when it's all said and done, you can say, you know what, thanks, but no thanks, I don't need the loan. After all, we don't mind. Or maybe we conclude that you're actually going to need a lot less than you thought because of the forbearance. But I would encourage you to do both.
And where can you tell us a little bit more about the EIDL loan, Tim?
That's the one we've been talking about. Sorry, that's our shorthand, Economic Injury Disaster Loan, EIDL. So sometimes in shorthand, we call it EIDL. I apologize for that.
Got it. I was like, well, I haven't heard of that one. Okay, that's good to know. Let's go to the bottom of the list. Jeffrey just asked this question. He's got 5 separate corporations. Each one has one restaurant within it. Should he apply through one of them and reference the others in the same application?
I think the answer is yes. You probably, I'm going to assume that somewhere an attorney or a tax accountant has had you set up a holding company. And each of those corporations is part of that holding company. Probably that holding company is what needs to apply. And once again, we're going to look at each of those 5 corporations for how they're affiliated. And if you have ownership in all 5 of those, particularly if it exceeds 20%, then we're probably going to add all 5 companies together to determine if you are small or not. And if you're not small, then this loan you're not eligible for it.
This is an interesting question related to sort of what's going on in Congress right now. If they apply for the SBA loan and the federal government approves their proposed program as it exists right now, will that keep them from getting help on that end? So if they get the SBA loan now, will it prevent them from getting help from the federal government later?
Well, we don't know until they sign this into law. Right. I'm not aware of anything that would preclude that. It's very, very rare that a SBA disaster loan is predicated on whether you've received some other kind of assistance. Normally, we tell you to get all the assistance you can to make sure that your business does okay and prospers in the future. So I can't answer that definitively, but I would not think that would be a problem.
Sure. Santiago is asking, what interest rate are they getting currently on the SBA EIDL loans?
3.75%.
Okay. We kind of already answered that question already. Let's see here. Let's go back up to the top. Well, that one's on forgiveness. A lot of people are asking sort of about loan forgiveness. So we've kind of already addressed that.
Because that's in pending legislation.
Exactly.
So we don't know anything about that today.
Exactly. What about Shelley's question, third from the top? It says, as far as ownership of an LLC or limited, you said to list 50% of multiple entities owned. Can this stop once you end up with the GP of that company, or is it for all entities owned?
Let me find that.
Yeah, it's third from the top right now. Shelley.
Here we go. What that meant, Shelley, is if in your restaurant, one of your owners also owns 50% or more of an affiliated company to your restaurant, then they would have to be involved in this loan. They would have to provide the 4506T IRS form and a personal financial statement.
Where do you have any suggestions, Tim, on where people can get help if they don't qualify as small? I know you listed a few other things in your resource page.
I think the best thing, the absolute best thing, I think, is for them, excuse me, is for them to contact these folks that are on the screen now. They are collecting every resource they can as they learn about them, and there might be something available. We know about the Texas Restaurant Association grant. We know about the Galveston Economic Alliance loan program that's listed right here. But the very best thing to do is call your existing creditors, both personally and for your restaurant. So you may not have heard this, but some major mortgage companies and banks are going to forbear mortgage payments if you're directly affected by this crisis. I think you got to talk to them about it. They're not going to do it automatically. Same thing applies for your restaurant. You have folks that have financed you, either you borrowed money for your equipment or whatever it is, your furnishings. Contact them and see if they have some program now that they can do for you. Sometimes it's as simple as them saying, you know what, this is okay, just don't pay for the next 2 months, and then come back then and we'll see where we go in the future. And right away, you may be able to get some cash flow relief for your business.
Okay, what about, what are likely criteria to reject a loan application?
Most important thing is that you can establish, and we can work with you to establish an analysis that shows the loan can be repaid. That's it.
Okay.
If you, in addition, if you have bankruptcies or you are, several months behind with several different creditors, then it probably is not going to be good. You're probably not going to get approved. But if you are basically current on your obligations, then the number one thing is that we need to be able to show our boss, which in this case would be Congress, that you can repay the loan that we make to you. Well, that's it. Now, remember, this is a low interest rate, 3.75%, and it's in most cases going to be, or maybe all cases is what I'm being told, for 30 years. So you can do the math on that. The typical, let's say, $1 million loan for 360 months is not going to be a massive payment. Right. So we may be able to make it fit, and almost everybody can get financed. So if you have, you know your personal situation. I would say that if you'd gone to a bank back in January or December, and they would have told you to leave because they weren't interested in financing you because of your credit situation or your lack of ability to pay, then we will probably make the same determination. But if you went to them and you think, maybe they would have financed you at a high interest rate, but they still would have done it, well, then you should absolutely do this, because we're going to give you 3.75 for 30 years.
And is everyone getting 30 years? Are there penalties for early payoffs?
Yep. So normally everyone does not get 30 years. It's on a case-by-case basis. So as the amount gets larger, and to make it more affordable for the business, I have been told, I can't confirm that, but I have been told by our disaster people in SBA that it's going to be standard across the board, 30 years for everything. Can you pay off early? Yeah, we don't care. We're not a bank, so we're not really counting on the insurance income. Sure. So yeah, if you paid it off early, I think we'd probably be happy about that.
Tim, can you remind everyone what makes a business small? And then follow-up question, if you were a large business before, but now would qualify as small, how can you show that? Sure.
So for most restaurants, again, if you Google SBA size standards table, that'll take you to our website, grab the PDF table, do a search for restaurant, and there's all the definitions of size. The most common one is $8 million of revenue, averaged over 3 years. 1 year was 7 million, 1 year was 8 million, and the next year was 9 million. that should still average out to $8 million. So it's averaged over 3 years. So if you did 10 million last year and you did 5 million this year, and you've only been in business 2 years, and your average is 7.5 million. So remember, we're looking over a 3-year time period. But if you exceed 8 million, then in most cases, then we do not consider you small, and you would not be eligible. For some of you, you have more complicated situations with maybe you might have 5 restaurants, you own 1, and you only own 10% of the other 5, and other people own the remaining portions of those restaurants. And if you just take that percentage of all the revenue, it may be less than 8 million. Does that mean you qualify? Yeah, I'm not so sure you do, because all those businesses are what we call affiliated, but you might. So the best thing you could do if you're in that situation, if your situation is that complex, then get in touch with the Small Business Development Center or the SCORE organization or the WBA organization and let them help you out. I can tell you that the Gulf Coast Small Business Development Centers, or for those of you that aren't in Houston, or wherever you are, you have a Small Business Development Center. There's some in San Antonio, they're in Dallas, they're all over the place. Call them. Most of them have worked with the SBA before, specifically to help us do economic injury disaster loans. During Harvey, the Economic Injury Disaster Loan Center for Harvey was at the SBDC in Midtown Houston. So they know these things relatively well. They should be able to give you advice. They can't give you an answer because they're not the SBA, but I think they can still give you some advice on what your options are. So if you're in that kind of complicated situation where you're probably not really small because of your ownership status with multiple restaurants, give them a call and let them give you their input.
Got it. And just as a reminder, the 8 million average revenue, that's per location or for all restaurants combined?
That's for your whole company. If your company has 5 restaurants, then it's for all of them.
Okay. Okay, this is a good question from Ronald. If you're approved, the 25,000 is sent out within, well, that's not true. It's not within a week. It's 4 to 5 weeks-ish right now.
Once you're approved, the first disbursement of 25,000 would be within 5 days.
Oh, within 5 days. Oh, good. Okay. But if you were approved for 300,000, how does the balance come?
Great question. It depends on the situation. It may come in pieces. So we may send you 2 months worth. And then if it looks like the disaster is clearly lasting longer than that, we'll send you 2 more months worth, etc. So you just do the math on the balance per month and send it that way. Or it could even be all as one big number. But usually with disaster loans of all kinds, not just economic injury, but property damage, all that, they are sent to you in pieces as they're needed.
Got it. Gregory's question, basically they have multiple owners that own parts of the company. Do each of them need to provide financial statements with the application?
Yes, if they own more than 20%, or if it's a partnership, they have to, if they're a managing partner, or if it's an LLC, and they're a managing member, then they have to provide the personal financial statement and a 4506T. Because they have such a significant percentage of the company, they have to be involved in debt decisions.
Got it. Got it. Okay. What about if you have other companies that have no affiliation with the restaurant, do you have to provide financial information on those entities?
I think probably not. If you aren't borrowing the money for those businesses, then I don't think we're going to get too worried about them. We will be interested in the money that they generate. So one business might be able to support the other business during a time of disaster. But this one I think is pretty unusual because we don't know when it's going to end. So if that's your situation, I would not let that stop you from pursuing an economic injury loan.
Got it. Okay. Does the annual revenue calculation include third-party sales, for example, Uber sales?
Yes. It's all revenue.
Just typing that back. Are there origination fees associated with the loans?
There are not. It's all federal government money.
Great. Got that. Just we're going back through to make sure I've got a lot of these. A lot of these are kind of repetitive, so if you've already answered them, Tim, I'm not going to have you answer them again. We'll make this recording
Let
available.
me just throw one out because I see R.L.E. Magnuson's question.
Go for
Yeah,
it.
you know, I don't know the answer, but I think that's where you want to call your local small business development center and ask them their opinion. If you own 4 completely separate companies, then it's probably 4 completely separate applications, but one person, you, owns them. You own that 90%. So the R.L.E. Magnuson person or company, we're going to add all that together and make sure you're still small. So I hope that answers that question.
I think so. What about the one right above it? Do management fees and rent count as operating expenses?
Probably so. I don't know what the management fees are for, but rent is most certainly an operating expense. And if you're paying somebody to manage your restaurants, then that should be an operating expense as well. Ask yourself this: if I don't pay it, will my business operate?
That's a good test.
An operating expense.
Good.
Yeah. So no gummy bears on the desk. I cannot do those and my business will still operate.
Got it. What if you had a restaurant that closed a year ago? Does its sales, does it factor into the small business calculation?
That's a hard one. I'll answer it this way. If you qualify leaving that business out, then go ahead and apply and make sure that you discuss that with the disaster loan analyst. If you've closed the business, then it shouldn't continue to apply, but you'd still want to discuss that with them because sometimes we don't have a lot of latitude. We have plenty of attitude, but we don't have latitude sometimes on how to define some of this because it's actually written in the Code of Federal Regulations.
Okay. Let's go down to the bottom. Allison is still a little confused. I imagine she's not the only one. They don't have a holding company, but still have 4 separate corporations. Is it still 1 application or 4 applications?
Yeah, that's the one I was actually talking about earlier. Mm-hmm. It's probably going to be Allison is going to wind up being the applicant that owns 4 stores, that owns 4 corporations. We're going to add all of them together to make sure you're small.
Still under that 8 million cap.
Yeah, and it should be 8. You need to go to those size standards and make sure which one applies to you. Like I said, I think catering is much larger, and there's some other category of something really unusual that's larger, but the most restaurant definitions are 8 million, and a limited service, whatever that is 12 million. So if you think you're small, then and you have 4 separate corporations, and you are set up as like an LLC or a subchapter S or a C Corp, then you're probably going to be filling it out in the corporation name, in which case it would be 4. If not, then you're probably going to be filling it out in your name, and it would all wind up getting added together. Best thing, Allison, and maybe for some of the rest of you, go watch that video I told you about, either one of them, as well as go look at the PowerPoints on the SBA Houston website on how to do the application, and it might help you find that answer. The other thing is just simply go online and start the application and see what happens. Sure. Now, I am told that if you get partway in and you decide you need to stop and come back later, you can save your place and come back and start where you left off. But I'm pretty sure you're going to have to look for a button that lets you do that, a save button or something like that. If you simply back out of the system, you might lose everything that you entered.
Got it. And just so y'all are aware, in the chat window down below, I posted a link to this table that Tim keeps talking about too, to the PDF. So just go click there and you can see it. Ronald asks a good question. We're probably going to take 2 more questions. You said to try and do a bridge loan, and this is related to how the funds can be used. If you acquire one for 90 days, a bridge loan for 90 days, can you use the SBA funds to pay it off.
Yes. In fact, what many banks will do is if they do the bridge loan, they'll actually tie it to the economic injury disaster loan. And the idea is that the loan will be paid off with the first installment from the disaster loan, or some percentage of the loan will be paid off with that first installment from the disaster loan, and then the remainder would be paid off, in my experience, within 6 months. But so if your banker or your lender that you work with will do a bridge loan, usually they will tie it to the disaster loan, either to be paid off 100% or to be paid off some certain percentage, and then the rest paid off within 6 months. But it differs totally by the bank, which also means you may have an opportunity to negotiate some terms. So that's not an official SBA thing they're doing. They're doing it because they're a nice bank.
Got it. Okay, let's take Gregory's question as the last question, kind of a combo. And we've seen this unfortunately happen to a lot of restaurants in our state, where they close their restaurant and furlough their entire staff, including themselves, and all of their employees, including the owners, plan to file for unemployment. Does this affect them in any way when they go to apply for the SBA loan?
And I apologize, Anna. I had to answer an offline question. Could you mind just doing a quick recap of that?
Sure. So Gregory was asking, or he was saying that he had to close his restaurant and furlough his entire staff, including himself, the owner, and they all plan to apply for unemployment. Is that going to affect them in any way when they apply for SBA?
I don't think it is. I think, some people might not like my answer, but I think what you did was just very prudent. You had to conserve cash. We were not going to, penalize you for making prudent business decisions. But your normal operating expenses when you have those folks employed is what you're going to wind up putting on your loan application. So hopefully we'll be able to help you with that. But no, that should not have any bearing. All that means is you did what you were supposed to do as a business owner.
Great. Well, Tim, thank you so much. I know there's been a ton of different questions. Thank you for taking them all. Y'all, you have his contact information and some great other resources to look up. He's right. There are business development centers in cities across the state of Texas, so be sure to look them up. If you have any other questions, feel free to contact me, Anna Tausen from TRA. And for the rest of you, stay safe out there and have a good day. Tim, thank you again.
You're very welcome. Thank you, everyone.
Bye.